Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders. Hi, today is March 17th, 2025. Happy St. Patrick's Day. In China, and I think in the U.S. market, both released retail sales. China's year over year was about 4%. US was, 3.1%. So both are not too bad, even though in the US market is a little bit lower expectation. And the reason we're mentioning it in US is actually, I think, because of the volatility in the US market, there are some movement of people cautious on US equity because of its valuation. And then the outside the US, including China, benefited a little bit. I think probably the most benefit was more Europe and Japan, but China also have a cold tail, particularly with a reassessment of China tech resiliency. So that was a couple questions that I got over the weekend when Chinese investors. I did a session with a local brokerage firm for their investors, and they actually have really significant questions about what the U.S. policies are. I think this was one of the questions they were asking is the volatility of the U.S. Helping Chinese equity, and my answer is that to a degree yes, but it's not moving U.S. into China. It's more about people moving a little bit or reallocating, or depends on the situation, putting on some ex-US positions, and China being part of the ex-US benefited along the way. So it's not direct from US to China, but more the US versus ex-US narrative. I also got a question about President Trump seemed to be very focused on domestic policies right now. Even though his campaign is very much focused on competing with China, is U.S. policies changing regarding China? And my answer to them, and my answer here is no. I think because the U.S. political calendar, President Trump want to move a lot of domestic policies off his plate first, and then the second is Russia-Ukraine war situation. So yes, in the a couple months in the last, China has not been as much of a headline for the Trump administration, but I think it will be wrong to assume that this is going to be the norm. The other thing I want to mention a little bit is that China did came out with a package. The aim is to stimulate consumption. In the package, the languages definitely shifted. It mentioned specifically it wants to do a bit of demand side instead of supply side stimulus. That is most likely going to be money for people who want to have kids. Because China is a little bit challenged in motivating young people to get married and have kids. And it also mentioned the stock market on trying to stabilize, and hopefully stock market can be a source of wealth. There, I generally, I think for China's policies, people have a little bit higher expectation. The actual money that flows through is probably not going to be as big as people expect. So I think again with China investment, it's still characterized by higher volatility, and people are focusing a lot on policies, not on actual impact. Just yesterday, the Chinese housing price data was also, made known. That the Chinese housing, we've talked quite a lot over the last 2 years in terms of China's housing market facing a decreased price pressure. So in the last 2 years, we've been talking quite a lot about the decreasing pressure on the housing market. It was a bubble burst. There have been a couple of times, the market got excited, think it's stabilized the bottom, but I think recent data shows that it still is decreasing. And I think here is where, if you listen to my podcast, I've been quite consistent. I don't think the housing market it has been close to the stabilization. If I have to make some signals or things to think like when might stabilize, I think Shanghai is a good place to pay attention to. Right now, there are still restrictions on buying Shanghai's houses. How you can see how some policy response in China is just so behind the curve. So I think if Shanghai seeing these, continue the price decrease and decided to remove those restrictions of people who buy in Shanghai, and probably start giving out incentives on people who buy houses in Shanghai, that's probably when the stabilization happens. So I think it's about the expectation, right? Like, because China has been very negatively viewed in terms of equity. If you think about it, 2 years ago, the main theme was ex-China or China uninvestable. I think for now, that thesis is probably now is much relevant. Now it's about how much China in your portfolio you want to tolerate, given the risk assessment. Even as a hedge, there were quite discussion shows that the China equity is a good hedge for U.S. High momentum stocks. So I think all these give a little push for the China equity, but overall, because the hand of U.S. policy, U.S. After President Trump kind of feel comfortable with his domestic agenda, got what he want, then his focus on China definitely will increase. And between U.S. and China, generally if you have followed me on Twitter or listened to this podcast, generally I'm quite negative on U.S.-China relationship. It's the decoupling is also going to be pushed. Obviously, sometimes it's difficult, but I think these are definitely more on the negative side. And I think what I have said generally has been proven true, that the decoupling is also accelerating, both from the policy side and also from Chinese side, when they realize that this U.S. is indeed pretty serious on this. So I think that baseline does not change. In terms of, there are also a lot of headlines on Taiwan Strait. I think for the very short run, 1 or 3 years, we probably don't need to worry too much. 2027 was a year that the U.S. intelligence gave the assessment. But that assessment was given before President Trump was elected. So I think even though right now in local headlines, China and Taiwan had a pretty tense headlines right now. Obviously, not everybody can pay attention to, and even I, trying to pay attention as much as possible. For example, just last couple of days, China released the name and images of some for internet, so-called internet military personnel from the Taiwanese side, as one way to kind of, show that the mainland China do know who was doing a lot of these internet attacks on China. But also on the Taiwanese side, their president gave a speech, will try to bring back military trials against the mainland personnel, possibly, the infiltration or those charges. Those are quite sensitive in Taiwan, because that reminds people a little bit about the authoritarian regime that Taiwan was under before the 1990s. So again, local headlines are not very good, but I think right now the equity market is shaking off a lot of these as the U.S. economy was still chugging along. And then the Chinese economy, I think probably benefited really from a typical Chinese household was able to support consumption because the high household the high household savings, and also help for people outside China probably not realize, but in China, if someone in the extended family, and when I say extended family, it could be like second cousins, if they are not doing well, people are generally expected to contribute a little bit to help. So that cushioned a little bit in terms of the economy not doing well. So the consumption number, the retail sales number was lukewarm, was still, I wouldn't say collapsing. And also government did give a lot of cash for counter, that kind of spending incentive. So if you buy a new car, they got a lot of government kind of a coupon, which can worth quite a lot of money. Could be, in something like a car could be a couple $1,000s. And buying housing as well. So there are some of the stimulus that still goes on. So I think the worst of China is not as bad as people originally thought. That helps the sentiment a little bit, and then the DeepSeek sentiment continue to be positive. Even though I think at this point people really need to move away from the DeepSeek story, because DeepSeek itself, if you compare to some of the local AIs, like by Alibaba, the local AI's quality is probably better. But I think it was really sparked people to kind of look at China equity again. So it kind of stuck with so-called DeepSeek phenomena, even though the phenomena now is not really about DeepSeek anymore. So again, thank you for listening, and then we look forward to hearing from you, and hopefully bring timely analysis and the information on China. And since the U.S. and China is in such a, I would say, geopolitical competition right now, so what happens in U.S. Particularly, impacts China. So I think it's also quite interesting that the Chinese investors actually want to talk more about the U.S. instead of directly on the U.S. market. How sentiment? I know a lot of Chinese investors, their overseas accounts invest significantly in the U.S. equity. So I think for them, they also want to know what's going on in the U.S. So that was really interesting experience for me. Thank you.